Hi guys, my name is Russell Folas. I'm an annual agent specialized in small business and health professional tax strategy. In today's video, we are going to discuss about the best way to how to pay for your education using tax-free money. Are you ready? Let's go. So why is it actually a problem if you are not using a tax-free money to finance your education or your child or your children education? I'm gonna put down an example for you to be understand for those who don't know what tax-free money is. Let's say you have to buy a car. The car costs $36,000. You have enough money to purchase the car. You don't want to run into a car loan or whatever it is. You know, some people buy a house with cash. So basically, if the car costs $36,000, and you pay cash, not using tax-free money, what will happen is that if you are paying $36,000, that means you're making enough money. Let's say you belong to maybe a 32% tax bracket. That means you are making around maybe $20,000. The real cost of you purchasing that car at $36,000 is actually up to $52,000. It's actually $52,941 that you are spending for the car that only costs $36. How do you figure out? It's simple. It means you have paid $36,000 for the car. Let's say what was the tax that you will have paid to get that $36,000. I mean, how much did you get before they remove the taxes to stay with $36,000? If you take $52,000 and you apply your tax rate of 32%, you will remain with $36,000. That means you are actually paying $60,000 more than what you're supposed to pay normally. In the other hands, if you are in the lower tax bracket, maybe you're on the 24 tax bracket, and you still want to finance your car, $36,000, what do? You go to your bank account, you remove $36,000 you pay. Your income is maybe between $120 to $130. You pay $36,000 car out of pocket, cash from your saving account or whatever it is. The real cost of that $36,000 is actually $47,000, because if you belong to the 24% tax bracket, if you put what you are losing by using the $36,000, like after tax, that is net of tax money, if you pull it back, you will see that you are paying $47,000. That means you are paying $11,000 more than the real cost of the car. Someone else who use the tax-free money will only be paying $36,000, because he will have took from his gross and put it somewhere before they charge the tax, and it will remain $36,000. Yours, you didn't remove $36,000 to put in your bank account. You remove more than that. I mean, you remove more than that, and they charge taxes on it. That's why you only have $36,000 into your bank account. That's how you see that. Anytime you use money that is not tax free, try to put the tax back into it, and you see actually what you are spending. That is what we call tax free money. It means what? The title of this, the video is about spending up to $150,000 in tax-free money. In other words, is that if you are spending 50,000, 150,000, not being a tax-free money, and you got the money, maybe you're making, you got, it doesn't matter how much you're making. Let's say you belong to a 37 tax bracket and you are spending $150,000 for whatever it is, which is not tax-free money. If you belong to a 37 tax bracket, the real cost of that $150,000 is actually $238,000. That is $88,000 more than what you normally supposed to spend. You are thinking that you are paying $150,000. So if anyone out there has spent $150,000 to finance his education or whatever it was, special education, tuition, book, computer, whatever it is, if you have spent up to $150,000, it means if you belong to a 37 tax bracket, you have spent $80,000 more than you think you are really spending. If you belong to maybe a lower tax rate, where's the calculator? If you belong to a lower tax rate, it's simple. You use a calculator to figure out, what is the real tax, the real amount. If you belong to maybe 35% and tax rate, you are spending $150,000. Your real cost is what? Your real cost is actually 65. It's actually $230,000. That's the real cost of you purchasing or spending $150,000. So basically, you can see the difference. If you minus the 150, you are spending $80,000. If you belong to a 35% tax bracket and you spend $150,000 not using a tax-free money. That's what I mean, using tax-free money. So it's a problem. It's a problem. Why is it a problem? Because as a business owner, you will have used that excess money, to invest, to expand in your business. If you are a nurse or a health practitioner, you have used that maybe to purchase a house. You have used that to do something else. Everybody needs money. Everybody wants to pay less taxes. The richest man in the world, Jeff Bezos. Some people will argue that it's Bill Gates, but that's not the point. The point is that his company, Amazon, last year, has paid zero taxes. Zero taxes. That means he has found a strategy how to pay the least amount of tax possible. That's not even all. He got a tax rebate of around $123 million. Not only it doesn't pay, Amazon is actually the most valuable company in the world at this time. But if you imagine that somebody or a big company like that doesn't even pay for the taxes, instead he gets tax rebate, it means a lot. It means that there are some strategies that are implemented anytime, any day, in the daily basis. So basically, if you want to see the picture of someone who has used tax-free money, last year, one of my clients, a business owner based in New Jersey, has saved $18,000 by using tax-free money up to $40,000 to finance his child education at Seton Hall University. That means the real cost he would have been paying would have been $58,000 if he didn't use a tax-free money to finance that education last year. because he belongs, he was within a 32 tax bracket. On the 32 tax bracket, if you are getting or using 40,000 tax free, that means you are getting advantage of up to $18,823. That's not all. The year before last year, another client of mine, which is a nurse, was thinking about finance his education for a master's degree, and I put him into that strategy. So he was able, the year before last year, was able to put $30,000 towards that education that he wants to pursue. That was a saving of $9,400. And last year, I helped him put aside another $20,000 within the same account or within the same area to finance his education. So that was another $6,300 saving, because if he would have used the $30,000, which was not, tax saving or tax free, and he would have used another $20,000 that it was not tax saving. Out of the $50,000, he would have been paying $15,000 more. Actually, $15,700 more. That means he would have been paying $15,000 plus $50,000. He would have been paying the total $65,000 instead of $50,000. So this year he will be starting his Master of Nursing program. He has put $50,000 aside for that. That's free money. What does that mean? Not only it means that anytime when you do put those money aside, the first advantage is that not only you don't pay money on that, but you are lowering your tax rate, because it's moving you from one tax bracket to a lower. Whenever you move from one tax bracket to a lower tax bracket, you are saving money. Not only you are not paying more, but even your remaining amount that is actually taxable, you are paying less taxes on it than you were supposed to. So that's the double advantage of using tax money to do what you can do with it. So what's the solution? The solution is within the tax law. Everything is within the tax law. We just need to look for it. So basically, and honestly, I think there are people who know about it. But if I'm coming now, it's because I also know that many people are not aware of it. There's a provision in the tax law that is called 529 College Saving Plan. The 529 College Saving Plan is a provision made by the federal government to allow people to use money without being taxed on that money if it's about the higher education, that means your college education. So basically, it's very important to know about it. Why? Because this year especially, some states has even allowed that type of money to be used for the K-12 education. That means you can use that money to actually finance your child at the elementary school or the middle school or high school. You can use that money now. It's about implementing, selling up, a strategy that will allow you to put that money aside with the intention of using it for your education. Education, it doesn't only mean tuition. It's about tuition, fee, book, supplies, computer, what you will be normally spending for your children or for yourself if you have to further your education. But the point is that The federal government only allowed people to put only $15,000 every year within that account, or put that apart. He said we can only give you each year 15,000 tax credit. I mean, yeah, that's free money. If you want to put that money apart, that set it up, that type of saving for your account, for your education. The issue still not resolved. How to use up to $150,000 of that money, even in 1 year, or how to put the $150,000 in 1 year and take advantage of those $150,000 in 1 year. What does that mean? I mean, if you're making $200,000, the strategy will allow you to put 150 out of your money, out of your gross income. That means you are only charged as if you made $50,000. I don't know if you guys can see the benefit or the difference of it. So that is what we are encouraging you to do. So if you are a a doctor, a nurse, or a business owner, maybe making decent money, but you are interested in figuring out how to actually spend or save up to $150,000 tax free money, I will be available to set aside a time to talk to you about it. Just click the link below to book your first health practitioner and business tax strategy session. Thank you. See you in the next video.